What's up, you guys? Brendan here. So while we've been in quarantine, a lot of people have put a lot of thought into how to make money while we're all stuck at home. There have been ideas like online tutoring, doing DoorDash, selling items on Craigslist or eBay, and day trading. And it seems like day trading has really struck a chord with a lot of people. And I understand why, because a lot of people like to tell us about all the money they make through day trading. It seems like everybody and their brother is making money hand over fist each day through day trading alone. And it's tough to not feel like you're missing out. So today, let's discuss exactly what day trading is. I'll tell you how I made over $28,000 in one day, and I'll give you my opinions on day trading, and you can determine if it's right for you. But before we get into it, please hit the like button for the YouTube algorithm. Okay, here we go. So what exactly does it mean to be a day trader? Well, day traders are active traders who execute intraday strategies to profit off price changes from a given asset. So basically they buy and sell securities throughout the day to try and profit from price changes, and they rarely hold any securities overnight. Day trading employs a wide variety of techniques and strategies to try and capitalize on perceived market inefficiencies. They use high amounts of leverage and short-term trading strategies to try and capitalize on short-term price movements in highly liquid stocks. Here are a few of the common strategies they use. Scalping, which attempts to make numerous small profits on small price changes throughout the day. Range trading, which primarily uses support and resistance levels to determine their buy and sell decisions. Technical analysts use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. And also news-based trading, which typically seizes trading opportunities from the heightened volatility around news events. Many view day trading as a get-rich-quick scheme, and it's easy to feel that way with a lot of YouTubers and columnists writing about how they make so much money on a daily basis. And I don't doubt it, volatility is good for day traders. So with this current market volatility, I'm sure some day traders are really taking advantage of this and getting lucky and making a lot of money. But what they don't tell you is that with that high level of risk, when you can make thousands and thousands of dollars each day, there's also a risk that you can lose that amount of money. And I can guarantee that these people who advertise about these big up days they've had, they've also had big down days. This definitely increases the level of FOMO for a lot of people watching. Someone creates a video about how they made over $50,000 in one day through day trading, and you feel like you're missing out, or you want a piece of the pie. But it's important to realize that there are no shortcuts to gaining wealth or achieving outsized returns in the market. Day trading is a complicated strategy that involves significant risks, and to even have a small chance of outperforming the markets requires an in-depth understanding of how the markets work and various strategies for profiting in the short term. While we're pulled into the success stories of people who struck it rich through day trading, we realize that most people don't, and many fizzle out or are barely staying afloat. Also, don't underestimate the role that luck or just the right timing has in your success in day trading. While skill and experience are certainly elements to day trading, there are very few successful day traders out there, and many of them got there through luck, and that eventually fades away. And it's important to realize that day trading has additional hurdles to overcome. They inherently realize more short-term capital gains and fees than a more passive strategy would. So to beat the passive strategy, not only do they have to perform better just in the market, but they have to perform enough better to overcome those additional costs from taxes and fees. When day traders buy and sell on an intraday basis, their gains are considered short-term capital gains, so they are taxed to them as ordinary income. Passive strategies generally hold their investments for a year or longer, so they're considered long-term capital gains and are taxed at a much lower rate. And even better, long-term passive investors can choose to never sell their investments and never actually realize that tax burden. Now, fees have become less of a concern as many brokerages now offer free trading, but some do still have limits on the number of trades per month, so you could still see additional fees from that. Now, day trading is also very active, stressful, and time-consuming. It really is a job, it's not a hobby. You have to stay actively involved following the markets throughout the day to try and make a profit. You're competing with professionals, and pros know the tips and tricks to succeed. They have expensive trading technology, data subscriptions, and personal connections. They're perfectly outfitted to succeed, and even they often fail. Among these pros are high-frequency traders who are looking to skim pennies or fractions of pennies off every trade. They use this through their trading technology, so you can't even compete with them if you wanted to. It's a crowded field, and the pros love to have inexperienced investors join. That just helps them profit. My biggest issue with day trading is that it's extremely speculative. You can do everything right, have all the best technology, follow your strategy to a T, and still lose. Retail investors are inherently prone to psychological biases that make day trading very difficult. They tend to sell winners too early and hold losers too long. It's easy to do this when you finally make a profitable trade and you want to get out before it drops. Or you hold an investment thinking it'll eventually turn around and it'll go back up, but it just never does. Volatile markets like we're currently experiencing are great for day traders and help them to get these outsized profits. But what happens when the volatility decreases? That could eat into your expected returns. So before I mentioned how I made over $28,000 in one day this week through investing. And as you may have guessed, no, this wasn't through day trading. Early in my career, I actually thought I could take advantage of investor psychology and I attempted day trading. And surprisingly, I did quite well in the beginning. But then I had some tough days and I tried to learn from those mistakes. And they were the common mistakes that a lot of newbies have, right? I was selling winners too early, holding onto losers too long. But I soon realized that my early success was simply luck, and I no longer felt in control of my investments. After a few large loss days, I decided that day trading wasn't for me. And instead, I prefer buy and hold long-term investing. I choose high-quality, diversified investments that I plan on holding forever unless there's a change in the underlying fundamentals. Now I feel like I'm in control and I know what to expect from my investments. Over a 20-year period, the S&P 500 has never had a negative period. So I know if I hold my investments long enough, I'm almost guaranteed to make money. Last Tuesday was a very good day in the market, and I've worked hard to save my money and add to my investments over time. I've invested in index funds, ETFs, and some individual stocks. And through the power of saving and compounding, this has grown to a sizable sum. So much so that on a good day in the market like last Tuesday, I can make over $28,000. And the best part is that to earn that money, I literally did nothing to my investments that day. No watching charts or stressing over when to buy or sell. I just went about my day as normal, and then at the end of the day, looked at my investments and saw that I was $28,000 richer. So how should you invest? Well, the only proven way to consistently and reliably make money in the stock market is to invest in high quality companies over a long period of time. This is how Warren Buffett invests, and he is widely considered to be one of the best investors ever, and he's amassed a fortune of over $68 billion, and he wouldn't touch day trading with a 10-foot pole. So I apologize for my slightly deceiving thumbnail. I'm sure that some of you thought I made $28,000 in one day through day trading, and you were looking for the secret to amass great wealth while sitting at home. But I'd also argue that a lot of the people who do advertise how much money they made through day trading in one day are also deceiving you, because they don't always disclose the down days. It makes it seem like they just make a ton of money each day, day after day, but that's really not the case. And the truth is that there really isn't any secret to amassing great wealth. All you need to do is increase your income as much as possible, reduce your spending as much as possible, and invest the difference. This is the only surefire way to great wealth. So what are your thoughts on day trading? Have you had any success with it? Maybe more success than I had early in my career? Do you disagree with my opinion on it? Let me know in the comments below. Also, if you like this video, please hit the like button, subscribe, and also hit the little bell icon so you don't miss any future videos. Take care. Bye.